Hey guys, so today is episode number 2 of the mutual fund series, and in this episode, we're going to talk about something known as ELSS fund, right? Now, ELSS fund is very important for all the people who want to understand how to save money through taxes and also how to save money as a normal saving instrument. Okay, so in this episode, we're going to talk about ELSS fund. So, see you soon. Awesome. So, what is an ELSS fund? Right, so ELSS basically means equity linked savings scheme. Okay, it is a type of a mutual fund that you can invest, but the concept of ELSS was basically what it says was, if you want to invest money in ELSS, the government actually gives you a tax rebate, okay, or a tax concession. Now, what is this tax rebate or a tax concession, right? Now, assume I have to pay 1.5 lakhs in tax, okay. What the government actually tells you is, listen, Shashank, if you want to pay 1.5 lakhs tax to me as the government, you can pay it to me as well. But I, as the government, want you to start saving money, okay. As an independent person, I want you to start saving money so that you're financially secure. Okay, so there is this one scheme that I'll allow you to invest in. Okay, and if you do that, I will assume that it is tax free completely. Okay, so what usually happens is every year, okay, there is a limit of up to 1.5 lakhs under this deduction called ATC. Now, ATC has a lot of things under it. I won't get too much into that, but under ATC, there is one thing called ELSS fund, okay, which is this fund that I'm talking about today. Now, if you invest around 1.5 lakhs in ELSS fund, okay, you get a tax concession from the government. The government is like, okay, I'm going to cut this from your taxable income. Number one. Okay. Number two, ELSS is linked to the equity, right? Almost 80% of ELSS fund is in the equity market, in your stock market. So if the stock market is growing, it makes more sense for me to invest in an ELSS fund. Now, the only problem here, or the only drawback of an ELSS fund, or the only differentiator of an ELSS fund is that if you put the money in an ELSS fund, you cannot leave it for 3 years. You have to keep it inside for 3 years. There's a lock-in period of 3 years. Okay, so for 3 years, you cannot remove your money out. Now, this is good for people who have this very weird thing of aaj paisa dala kal nikal diya, etc., etc. So if you get scared of the market and stuff like that, this is a good instrument, because once you put it in for 3 years, it won't let you remove the money, right? Little bit liquidity issue you will have because you can't obviously remove that. Okay, but this is extremely important for you to understand. Again, I will go through it in more detail, okay, right here. Let's go through that as well. Okay, so I've just opened about ELSS just to give you a better understanding of what it is. Okay, now ELSS is basically a type of a mutual fund. There are a lot of types of mutual fund, and we'll go through that one by one. But the reason why I wanted to do a touch upon ELSS today was because it helps in a lot of tax saving, and it's just the start of the year. So if you want to do tax saving from today, it's very beneficial for you to do it from today itself. Okay, so this tax saving scheme gives you around 1.5 lakhs in tax rebate. 1.5 lakhs is little more than 10,000 rupees a month you have to invest every month in an ELSS scheme, okay, which will help you do this. Okay, now what is an ELSS scheme? ELSS scheme are equity funds that invest a major portion of their corpus into equity or equity related instruments. Okay, this is also used for tax saving. Okay, this is actually a tax saving scheme and offer a tax exemption of up to 1,50,000 rupees from your annual taxable income. So if my taxable income is 1.5 lakhs, okay, totally after my standard deduction and all that, and if I suddenly want to, instead of giving that 1.5 lakhs to the government, I can actually go invest in my own savings, and this is for me. Okay, after 3 years, I'll get this money back in my bank account. So this is for me, and then I have complete tax free on that. Okay, this is under the ATC Act. Now, if you look at this, a lot of people have this question that, okay, once the return comes out of this ELSS fund, after 3 years, if I remove my money, will I be taxed? Okay, and yes, you will be taxed. But the thing is, after 3 years, when you remove all this money out, right, you can actually pay only a small amount of money, which is only LTCG you have to pay, which is long-term capital gains, and you will be taxed at 10% if the income from this ELSS fund is above 1 lakh only. Okay, understood? So first you get a tax exemption. This is basically what this means is the government is telling you that, listen, boss, start saving for yourself. Okay, and we want you to be financially dependent. So that is why they give you all these exemptions. They tell you, get a life insurance scheme, we'll pay for that premium. Get a medical insurance, again, it's free from the government. All that things they tell you for that you start saving it. And if you're smart enough from an early time point, right, if you have just started earning money, it is a very good thing to start putting a small SIP into an ELSS fund. Okay, and we'll go through what the other ELSS funds are in the market. Okay, now the minimum of 80% of the total corpus. How does this fund work? Let's look at some of the features of this fund. Okay, 80% of this fund is invested into equity and equity related instrument. That is why it's called equity linked savings scheme. Okay, The fund obviously invests in a very diversified manner across market capitalization, across theme, and across sector. There is no maximum tenure of this investment. You can keep it for even 30 years if you want to, right? But minimum is 3 years. Okay, minimum you can't touch this money for 3 years. Tax exemption is on the invested amount under section 80C, okay, which I told you. Income from this above 1 lakh is treated as long-term capital gains and it is taxed at 10%, which is completely fine because now I've saved 1.5 lakhs. Okay, that is why the benefit of ELSS is a different, it is a type of mutual fund which helps you a lot. Okay, now we already spoke about the tax benefit. Now, why is it useful, right? Now, there are 2, 3 things you can do in ELSS. One is, okay, you can just directly invest a lump sum amount. Usually what people do is by the end of their financial year, okay, towards March, before they have to actually pay their thing, what they do, they find out how much taxable income they have. They find out how much tax they have to pay the government. And instead of doing that, they'll be like, okay, now during March, I will suddenly invest a lump sum amount of whatever I have to pay to reduce my tax. Okay, I will put it into ELSS. So a lot of people do lump sum amount in the end, including me, right? Even I forget to do an SIP in the start. In the end, I'll directly go put 1.5 lakhs into ELSS. Okay, but what you should do, and if you're smart enough to do this, what you should do is you should do an SIP every month around 10 to 15,000 in this, cap it up to 1,50,000 in the end. And when you do that, by the end of the year, you've already got minus 1,50,000 as your taxable income. So that's damn good for you guys. Super rebate straight from the government. Okay. So ideally, you should do an SIP. I don't do it. I do a lump sum, but that's not a good thing. That's what I'm trying to tell you. It is again good because see, the entire fund, right? The returns of this fund is linked to equity, nothing else. Now, if you invest in a PPF, which is another, not a fund, but in another tax instrument, that only gives you around 7.1% return. I don't like such low returns. I want higher returns. Now, the thing is, how much does ELSS give is a very important question. Now, if you look at some factors, one, why people invest in ELSS fund is because it is only for a tax saving thing, right? If I want to invest not for tax saving, there are many other funds that I can go for, large cap, mid cap, small cap, but this is only for tax saving. It's like I want to invest in a tax saving scheme that will also give me some kind of rebate, right? That will also give me some good returns, which will beat the inflation. Trust me, inflation is what you need to beat all the time. 3 years lock-in period in this, compared to a PPF where you have to give a lock-in period of at least 5 years. So the advantage of ELSS is it has the lowest lock-in period when it comes to taxes. Lowest. Okay. Now I'll show you where you can find these ELSS funds. A lot of people keep asking me, where can I find these ELSS funds? So go to this website called Money Control. You might have heard of it. Click on mutual funds here. Okay. On Money Control. There is something called, I think it's top performance. Okay. No, it's performance tracker. Go to performance tracker, and under performance tracker, let me zoom in a little bit for you guys. There's something known as ELSS. Look at this. There's something known as ELSS. Click on it. Now, once you click on this ELSS, when you go down, what you will see, okay, you will see all these plans over here. Okay, so many plans. But then you'll be like, Shashank, there are so many plans. I don't understand what to invest. What is a good plan? What is a bad plan? A lot of people ask me this. So firstly, what you need to do when you click on this, instead of clicking on regular plans, remove regular plans and only keep direct plans. Okay, regular plans is where you'll pay a little bit of brokerage. So don't do regular plans, do direct plans. Next, what I do as a good measure is track the AUM. I don't look at all these sponsored advertisements, so remove that aside. Look at the AUM. Okay, AUM is what? Assets under management. So how much money is being managed by someone is under this thing called AUM. Okay, so I try to look at the top funds because if this fund is obviously keeping 27,000 crores in it, that means it is a good fund. Now look at the differentiation, right? The next one is Aditya Birla at 13. The crystal rank is also good. So I will click on this. I will be like, okay, cool. Let me see how much return this is giving. Over here, I can see, let's not look at the last 1 year return because last 1 year, obviously because of COVID, everything looks good. But if you look at the 3 year return and 2 year return, it's 17%, 13%, 16%. It's beating my inflation. Yes. Is it beating my PPF scheme? Yes. Then this is looking like a good plan. Again, I'm not sure. Let me go inside the plan. Okay. So then I click on this. It opens this thing called Axis Long-Term Equity Fund Direct Plan, and it's a growth plan. Okay, growth plan is basically this thing will keep growing, that they don't give out dividends and stuff like that, and 3 years you have to keep it locked in anyhow. The NAV of this, NAV is basically your net asset value, which is your price of buying this like a share. It is around 66 rupees. So you go here and you buy this, right? So if you have any broker that gives you a mutual fund option, you go to that mutual fund option. If you want to invest in ELSS, copy paste this and put it there, and you will actually get this plan over there which you can invest. If you still want to see the returns, right? Let me look at 5 year returns. Assuming we keep it for 5 years, let me look at 5 year returns on a one-time investment. Okay, so assume I did a one-time investment right now. Let me see if I can calculate returns. Okay, I assume I'm doing a one-time investment. Okay, I'm gonna do a one-time investment of 1,50,000. Okay, I did one because I didn't do an SIP. Okay, I did a 1 lakh in 1.5 lakh investment. Let's say 3 years ago, if possible, 2018 to 21. Okay, same date. Okay, almost the same date. Wait, let me check. So I'm doing 16th April 2018 to 16th April 2021. Okay, almost 3 years. Let me see if I had put 1.5 lakhs then what would be my result now. Okay, my total profit and loss, okay, for that 1,50,000 in 3 years, which is my lock-in period, which I can't touch anyway, right? That 1,50,000 would have gone up by approximately 45% till now. Okay, the sell value, if I had to sell it right now, it from 1,50,000, it would have been around 2,18,000, which is a gain of 70,000 almost. And an annualized return every year, if you analyze it over 3 years, it's around 13.34%. This is beating my inflation rate, so I like it. So if I'm anyway going to invest some money into tax saving schemes, why would I do it in an PPF which gives me only 7.1 return, 7.1% return, whereas I can get an ELSS scheme that's giving me 13.34 returns. Okay. And if you really want to see how it would work in an SIP, okay, assume for last 1 year, let's do an SIP of say 10,000 every month. Okay, that's totally 1,20,000 investment. Okay, if you see that in the last 1 year, you would have made around last 1 year, actually, let's not count. Okay, let's go to 18. Okay, because I don't like the last 1 year data, it's very skewed. Because everything looks very nice in the last 1 year data. Let's look at 2018, 2019 before coronavirus. Okay, to get an average. Okay, sell date also would be 2019, April 16th. Okay, let's assume. See this. Okay, in a year, if you had done SIP, see lump sum obviously gets slightly higher return, but assume you didn't do lump sum, you did an SIP. If you had done an SIP, you would still be getting an annualized return of around 9.56. You would have got a profit of around 5%. Now, this is slightly low, right? But if you keep doing this, because it's less than your inflation rate, so this is not advisable at that point, right? But what if you increase this duration? Because I've only taken 1 year, SIP start date to end date. Assume the sell year is now, okay, today, because I'm going to keep it for at least 3 years because I can't touch it. 1 year you did an SIP and you left it. Look at what happens to it. So I did SIP till here. For that 1 year I did SIP and then I left it for 3 years because I anyway can't touch it for 3 years. So remaining 2 years I've left it for SIP and see the returns, right? Automatically I get 45% total returns and 15% annualized return, which is again great. I'm saying it's beating 7.1. I'm okay. Is it beating my inflation rate? I'm okay with that. Okay, now look at this. There's another thing that you can also check. You can go down in this money control and see where they have invested. Where have these people invested? Okay. If you see, they've invested in big companies such as Bajaj Finance, TCS, Avenue Supermarkets, which is DMart, Kotak Mahindra Bank, HDFC Bank, Info Edge, HDFC, Nestle, Maruti Suzuki, and Divis Labs. And if these are the top 10 portfolio companies, top 10 stocks in their portfolio. So you can see all that as well. Okay, if you really want to go deep inside, there's something called detailed portfolio analysis. You can click on that. And then you have some ratios of Sharpe, Trainer, Jensen's ratio. This is for people who have done finance to understand how risky this is. But this is not risky, and I personally put a lot of money in this as well. So this is how you understand what an ELSS is. This is how you understand whether it's good or bad. Okay, let me come back to the main screen. Okay, awesome. So I hope this quick lesson of understanding ELSS funds is very clear for you guys. It is very beneficial if you do an SIP. It is very beneficial if you do a lump sum. It is awesome if you're doing it for tax saving schemes as opposed to the other tax saving things out there. It gives you market rate returns around 13 to 14%, which is again not bad at all. The only thing is it has a lock-in for 3 years. So don't forget that if you put your money in, you cannot remove it for 3 years. But for people who don't have patience to invest in the stock market, this is very good for you because for 3 years, you can keep it there and even you can't touch your money if you want to, right? So it's very funny that way. But it's good. Awesome. So now I hope you like this. This is episode 2 in the mutual funds. I'm going to do out such quick episodes and post it on Instagram. Now the next thing is, the next episode, what I'm going to talk about is index funds. Okay. And I'm going to launch that also soon because a lot of people have this question on index funds. If you have any more funds you want me to cover in the mutual fund space that you feel like you're confused or you don't know about, put in the comments below and I will see you soon. Okay. See you guys. Bye.